Couple of good trading sessions, a good stretch here up until the last couple of days. So maybe if you're retired or about to retire, you're wondering, how do I get into the game and what stock should I play to get into the game? Here this morning, joining us, your coach, your stock coach, Stewart Welch of the Welch Group with Money Tuesday. Good to see you this morning.
Good morning.
Let's talk about that. Maybe I'm retired or I'm a retiree. I've got this portfolio. I'm about to get into some stocks. What are some good stocks to own?
Well, I think the first thing is people are nervous about stocks in general. Nervous about the market. The market's near an all-time high or at an all-time high, and they're worried, is it too late? And what I'd like to see people do is, if they're going to move into stocks, move into conservative stocks, because particularly retirees, they don't have a paycheck to fall back on, so they're particularly nervous. Right. So what we like is the big blue chip companies with really strong balance sheets and a long-term history of paying dividends.
Well, you mentioned dividends, so talk about why dividends are important in terms of companies that pay those back.
Well, Mike, I think three reasons. Number one is a company that has a long-term history of paying dividends indicates a company that is strong enough and has sustainable profits to be able to pay those dividends. Okay. The second thing is dividends act as a buffer against the market. So for example, if a company pays a 4% dividend and the market and the stock price dropped 3%, you'd still be 1% ahead. So it gives you that little bit of a cushion. And then finally, dividend paying companies pay dividends, and what retirees are looking for is cash flow.
Oh, okay. Well, then give us some examples, maybe some stocks that people should look to.
Well, and this is long-term holds. Right. So long-term, I like, for example, Southern Company's paying a dividend of 4.7%. Mm-hmm. Eli Lilly's paying 3.7%. General Mills paying 3.2%. We've got Verizon paying 4.9%. Exxon paying 2.5%, and then Home Depot is paying 1.6%. It's paying a smaller amount because it's gone way up in value. Okay. So it's the stock price has risen substantially over the last 12, 24 months.
And again, I guess the advantage over this over a typical IRA or a 401k, I'm talking about if you're not retired yet, is that you can have access to this cash, which is helpful. Right?
Well, you can, and whether this is in a personal account or whether it's in an IRA, you could do it either way. Okay. I think the most important thing is you want to have at least 20 names, at least 20 stocks across a number of different sectors, like the financial sector or the energy sector.
Okay, so that way as one's down, the other's up, and vice versa. You're balancing.
And you begin
portfolio.
To spread your risk,
Gotcha.
So you're not taking on a lot of what's called single company risk.
All right, great advice, Stewart Welch. Thank you so much.
Thanks,
Your money
Mike.
coach. All right, we'll be right back. More Good Day. Stick around.